sometimes people ask me, what exactly do we need conference moderators for? It's for moments like that when you have to be exactly on time. But perfect presentation from Monica. It was very, very interesting. And next up, we will be hearing from some more key advocates and experts on this fund of funds in our first discussion and debate round up here on stage. Regina Hodits from Angelini Ventures is with us, as well as Oliver Holle, the CEO of Speedinvest, and Uli Grabenwarter from the European Investment Fund. They're all lined up. I'd ask them to come on stage as well. Please welcome them with a round of applause too. Thank you. And they will now be discussing the next steps in the implementation of the fund. It's initiated, of course, by Invest Austria, and it's now being established by the government, as we've already heard, and considered a key instrument to strengthen Austria's private capital market while also gaining positive macroeconomic effects. But more on that from the people themselves. Please enjoy the round. Thank you.
Thank you very much. And it's a great pleasure to be here with a full audience that actually is attending Invest Austria. And that actually means there's a lot of people here that have an interest to make sure that the investment climate in Austria, despite all of the macroeconomic challenges, is continuing to improve, is continuing to stay active. And it's great to have a round of people here that in their day jobs have contributed to their ecosystems and to the broader European ecosystem to do exactly that. And as a round of introduction, what we actually thought we would do is, first of all, I wanted to ask each of the people on the panel why they're actually here. So what has been your kind of experience, your qualifications, your motivations to spend really valuable time with us? And with that, maybe start with Oliver.
Well, I'm here because I've been here for a long time.
True.
I think I'm the dinosaur of the Austrian startup ecosystem. I started my first company in the late 90s. Started Speedinvest in 2011 with very significant help from the Austrian public money. So that was there already in 2011. Didn't really improve since then. So I'm here, and I want to change that. Yeah.
Perfect. And I mean, not to say is that without people like Oliver, we would not have on the early stage side any ecosystem in Austria. So it's important to have you here, and we appreciate you take the time. Jörg.
Well, I'm here because I was so kindly invited by Nikki. This was a great honor and pleasure. KfW Capital, we are one of the large investors in the VC ecosystem in Europe. We have started in 2018. We've built a portfolio of roughly 150 fund investments. We've committed 2.7 billion euros from our balance sheet. We financed about 2,700 startups and tech companies, not only in Europe, also internationally by this portfolio. We've started a direct co-investment program, and we've also raised a 1 billion fund of fund in 2023, which invests in the later stage. So working together here with Invest Austria and AWS to foster the development of the venture capital ecosystem. I think this is a priority, an important task, and I'm very happy to contribute.
Thank you, Jörg. And I think one of the important things why it's great to have Jörg here is not only that you have actually put this idea that several people have been lobbying for of a German fund of fund into action. You actually voted with your feet and came out of the private markets to actually manage that. One of the points that Monica was stressing, and I think this is really something which has helped the industry a lot, and thanks for having you here. Uli.
Well, people probably will say I'm here because it's a home play. Because my daughter is studying in Vienna, so this is a welcome opportunity to visit Vienna. But this is not the main reason why I'm here today. The reason why I'm here today is because I'm involved with the Austrian venture capital private equity market ever since I joined the EIF in 2000, and we have tried pretty much everything to inhale some life into this ecosystem. Moderately successful, let's put it that way. And I think that this initiative that we are discussing today, I consider it the first really serious attempt to kickstart this market, and we will do everything we can to help this happen.
Thank you so much. There's nothing to add there. You're probably wondering why I'm sitting here. I'm actually just a manager of a venture fund out there. The reason why I guess I'm here is because I was actually on the board of the speaker of the board of the German Venture Capital and Private Equity Association, BVK, during the times when we were actually trying to get this off the ground. And it took a lot of help from people like an equivalent of Monica and Philip Kinski here doing studies, to people out of the industry like Jörg saying, yes, this is something I could even think of managing, to ministries that actually went out of their way. It was a 10-year journey from the idea where it became concrete. So that's also just to be said. So I think the Austrian speed that we're seeing right now is something you could beat us in Germany. And so I think this should be an aspirational level here. And with that, actually, what we wanted to do is we heard from Monica a lot of things that actually should be considered as the do's and the don'ts of going from now a commitment to actually make a fund of fund in Austria work to actually putting this to kind of real down to practice. And maybe Jörg, starting with you, if you actually kind of wind back to the stage where in Germany there was a commitment to get it done, to actually get it then to the first closing of the fund, what are the main factors of success and the main focus points that you would give the ecosystem as kind of a to-do list?
Well, that's a very long question. I think if I should answer that completely, we sit here until tomorrow. But
okay, there's work to do.
I'll try to focus on the major points. First of all, I mean, what's the problem? When we look at Europe and at the venture capital sector, where does the capital come from? It comes from the public sector. So the public sector is really the biggest investor group in venture capital. Interestingly, the second largest investor group in venture capital are family offices. But institutional investors, insurance companies, pension funds, endowments are much larger pools of capital, and they are less active in venture capital. And we discussed back in 2017-18 the question with the German government, why is that so, and what needs to be done in order to activate those large pools of capital for venture capital, for financing innovation and technology in Europe, what we urgently need. And so we figured there are kind of a couple of obstacles which are very particular to the venture capital market and which needed to be overcome. First of all, the market is quite intransparent. So if an asset manager in an insurance company wants to invest into a venture fund, he has no Bloomberg or he doesn't know where to start. So he needs some intermediation, some intermediary. The second thing is venture capital investments are usually very small. If you're an asset manager in an insurance company, you really want to write larger tickets, 50 million or above. But if you invest 50 million into a venture capital fund, sometimes you buy the whole fund. So that doesn't make sense from a portfolio diversification point of view. So this is so we came up with the idea to create a fund of fund in order to mitigate this scale problem, so that investors could come up with or could put larger amounts of capital to work, that they have a portfolio diversification, and that they have some navigation, us as a professional investor in that space, really selecting the top performing asset managers. And here we really come to probably the answer to your question. It's really focusing on performance when setting up such a fund. So selecting the best performing managers, especially from a sovereign investor, if they run the fund, is very important, because the investor from the private sector, they manage fiduciary money and they want to have really top performance. They must have top performance, invest in top performing asset managers or venture capital funds in order to fulfill their fiduciary duty. So this is really important, to set up a very professional, stringent asset management or investment process where focus on performance is key. And this is and another thing which is very important, that it's quite paripassu set up. So the sovereign investor should have the same rights and conditions as the private investor, or other way around. So there shouldn't be two tiers of investor classes. So this is very important. And really, to set up the product in a very market standard way is important. Things like alignment of interest are important. And so there are a couple of things, but it should be, if it comes from the government, it should look like a private sector product.
Okay, so product definition is important, and also opening new classes of investors, because it's something that we always hear is, are we not cannibalizing the few people that anyway are supporting the industry by actually now taking that money, putting it into a DACH fund? And I think what I'm hearing is you guys have been able to motivate also additional funding sources that were not yet investing that much on the private side, and especially not in the venture capital side.
Yes, I mean, in venture capital, as I said, we don't have the problem of crowding out. So we really have the problem of crowding in to get private capital into the sector. So this is important. But as I said, creating an investment product which allows especially institutional investors to commit larger tickets into this asset class is key. Some of the investors didn't invest because the ticket sizes are too small. Other investors didn't invest because they did not know what manager or what venture capital fund to select, because the market was intransparent. So offering those solutions to those problems is very key.
Staying on the structuring side, so Uli, with regards to an incentive scheme, we heard also in the presentation before that actually motivating investors to consider that product by also financial means, kind of attractive terms. We heard just from Jörg, actually, no, it's supposed to be paripassu, the closer to market is better. Any words of wisdom on the product side?
Yeah, I think we had a very, very funny experience in the run-up of this initiative in Germany, which was a gathering with insurance companies and pension funds back in 2018, 2019 or something like that, trying to make the case for investing in venture capital, private equity. And obviously all the arguments came about cost of capital, risk profiles, volatility and things like that, which we pretty efficiently countered with the performance that we could demonstrate at EIF, because the reality is that in EIF we've been investing in venture capital, private equity investment mandates pretty much across the entire spectrum of policy objectives, from the most developmental type of activities to fully fledged private sector risk return profiles. And in the entire history of EIF that I've been witnessing, and that goes back to 2000, we have not managed to lose one single euro on any of the investment mandates that we have been managing. Now, when we had this discussion with the insurance companies that were claiming to have a kind of desire for downside protection, a guaranteed kind of recovery of capital and the full loss protection, and they were ready to give up anything that goes above 3% of return, I needed to claim the kind of Chatham House rule and say, ladies and gentlemen, are you completely insane? Because you're giving up basically 3/4 of the upside in order to get rid of a risk that economically speaking does not exist. I mean, we can debate on the impact that it has on kind of capital allocations, things like that, and that's a different topic that needs to be discussed with the regulator at national and European level, obviously. But from the economic perspective, getting rid of a risk that physically does not exist, giving up 3/4 of your upside, that's economically insane. And I think that eventually led also to the experience that Jörg had, because they launched the fund of fund in the first instance as a kind of two-layered type of initiative, where the downside protection was there, and eventually the private sector investors chose the paripassu, and that's the reason why you're going fully paripassu now, because luckily, at a certain point in time when the institutional investors were looking at the value proposition, is that maybe we're not going to give up 9% of IRR in order to get rid of a risk that doesn't exist.
Okay, thank you very much. Oliver, from the side of a fund that actually potentially can ask a fund of fund to invest in a new strategy for a venture fund, what would you actually say with regards to product definition that is important from the receiving fund sides?
To be honest, on product definition, I think you're the experts. It's so clear, it's so easy. It's not rocket science. all of Europe is doing it. Austria is 15 years behind, 15 years. So now making a big fuss about product, I honestly think it's not the issue. The issue is speed. The issue is getting this done, getting this done in a way like the world is internationally working, and it's very clear how it's done. So just let's do it. Let's not wait for another 5 years, and let's not make the great the enemy of the good, because that's my biggest worry here, that we're trying to build the best possible model out there, and then it takes 3 years, 4 years, 5 years, and this whole thing goes to the ground. And that's what Austria cannot afford. We are in a very, very steep competition within Europe, but also globally. My job nowadays is spending, I just came back from Abu Dhabi 2 weeks before in Taiwan and Singapore, and everybody, the whole strategic impetus of these countries is attracting innovation capital and innovation economy to their countries, and this is done by capital. And if we don't do it, if Austria doesn't do it even within Europe, I mean, it really is, it's dangerous. So I think that is the main issue. Like there are a lot of details that we can discuss, but it's not the main issue. Let's do it. There's a very, very strong, small but growing Austrian VC ecosystem here. None of them got any meaningful money from Austrian public side, which is ridiculous. If you like, we have more money from France or from Germany or from other countries than from Austria. From the public side, that should not be the case. So we have really catch up to do, and let's just do it. Yeah.
No, I think keeping it simple is, I think, what we're hearing from all sides, and I think this is a very good kind of starting point. It's interesting what you say about the Asian initiative. So I think we all kind of see the bridge from Europe to Asia getting stronger, and we need to make sure that it's actually an inbound, not only an outbound from that side. So completely echo that. And should structure
and GCC. I mean, if we talk to all these big sovereign wealth funds there, of course they have requirements. Of course they want then innovation to flow into these markets. Yeah? So it is a competition that is not just within Europe, and even within Europe, Austria is losing. So
absolutely, and I mean, in the end, I mean, if we want to have fund managers that can actually raise money in the GCC, also internationally, we need to make sure we hire the right people. So, Jörg, how did they manage to hire you, and what type of people did you have to hire then under you for the fund-of-fund concept?
Yeah, I think besides capital, talent is really key. And I think globally speaking, we live in a very, we have a very attractive window of opportunity in the current world. Because if we look at the US, there's a lot of talent which is also thinking about other places to work. And I think it's really an opportunity in Europe to attract investment talent into Europe to further build our venture capital ecosystem. And I think it's also the role of the policymakers to make it most attractive to attract that talent. If we, for example, look at the GCC, they do not only offer capital, they also make it very easy to relocate. They have concierge services, they have those golden visas and so on. So a lot of things I think we in Europe could also think about making it attractive to attract top talent from around the world. But because I think globally we have a great window of opportunity here.
With regards to fundraising competencies of the team, so if we actually think about, we're going to have hopefully a public-private partnership being set up here, but we need to attract the private capital. What kind of competencies would a team that actually has to go out have? So what kind of would you put as the spec of the person that leads that team?
Well, I like to keep it simple. It's a little bit like the fisherman and the fish. So really, the product has to be attractive the fish has to be attractive to the fisherman. So it's not the fundraising team. This is only making the contacts and trying to place the product. It's really the product delivering performance. DPI, not TVPI, DPI. So distributions is really key, and really trying to create a product which is attractive. And which can compete with other products in the market. I think this is really the key. Mm-hmm. And if you have that product, it will find capital. So really, as I said before, setting it up in in a competitive way to other products, private market products. I think this is really key, and having an alignment of interest so that it's being managed. I mean, it's a long-term investment, an investment in a venture capital fund. Investing in a fund of fund is even longer. I mean, venture capital funds usually have a lifetime of 10 years. Fund of funds, if they have an investment period of 4 years, they have those 4 years plus 1 plus the 10 years. So you're at 15 years and above. So you really have to have teams which stick around, which manage, and which are long-term oriented, motivated to really create value for the investor and for the LP, and have an alignment of interest.
Okay, so from the product side, I think what we've established is keeping it simple, making the terms attractive, making the investment strategy attractive. To that we come in a moment. Let's assume we had that product. With regards to setting up teams, Uli, when you look kind of at the other initiatives in Europe, anything that you would like to kind of give the people that are in the end going to make the decision here in Austria as a recommendation, or as also do's and don'ts with regards to structuring a team for such a fund?
Yeah, let me maybe look at it from a little bit of a wider angle on this one, because I think it is a very, very important question. What you need to put together to make this happen, to make it a success, very much depends on what you want to achieve in the first place. And I think there is a lot of things that can be done on the spectrum between non-ambitious and ambitious. And when it comes to the non-ambitious part, I think that's not very complicated to qualify. This is basically putting out an ATM and distributing a few PIN codes to fund managers, and then report that there is a success after 3, 4, 5 years that we have put some financing rounds together, or things like that. But that is something which is going to be a very short-lived experience and very expensive from a kind of public sector return perspective of putting something together like this, because we are talking about, I think there have been figures of 60, 100 million of public sector money that I am in the discussions. The question is, how far do you want to make this money travel? And what do you want to actually create as a leverage from the private sector with it? And when you actually look at it from the perspective of not offering something that ticks off a box in the coalition agreement of the current government, and not something that actually creates a platform for a few institutional investors to actually buy themselves out from this policy pressure of finally doing something for the economic development of the market that they're operating with. If you actually want to push it beyond that, it only makes sense if you create a structure that not only ticks off this box of this first-time exercise of a fund of fund in Austria now, but becomes genuinely a long-term perspective of fueling an innovation finance market in Austria. And for that, you need to be convincing to an extent that those investors that for whatever reason they come in this round now, cannot even imagine not being part of the next round. Because the return that is delivered is so attractive that they say, actually, it's something that, in the terms of the economic impact that it creates in my home market, is something that fuels my own business model at the end. And in order to achieve that type of value proposition to an investor community, it's not rocket science in investment. It's the 3 most important investment criteria that any management team needs to bring to the table, which is track record, and track record. You need to be able to demonstrate that in a strategy that has been clearly defined, you're capable of going out, identifying those teams, that you have the discipline in selectivity, and that you have actually the vision to adjust to market developments that are happening, so that you're always one step ahead of the curve. And that's something that experienced management teams can bring together. That doesn't mean that the management team needs to have spent primary, secondary school and university together in order to run the management of a fund of funds. But they individually need to have eaten enough salt so that they know what they're talking about.
No, absolutely. And I think this is crucially important that we have the aspiration to get the team with the best record, because in the end, the product that you will be selling, whoever is going to be selling this at the end, it's a new product. There is no track record for that product in Austria. There's great record in Europe, in several also geographies in Europe, be that Denmark, be that several other geographies, even like Portugal, similar size kind of markets where actually we have track record numbers, but we don't have track record numbers for this. This is a new product, so the track record needs to come from the team. So this is definitely something I would clearly echo.
Can I just make one comment to this, because I think in the perception of investors, this kind of dimension of new fund managers, new emerging markets and things like that is always something like a mental barrier. And you mentioned that there is no track record that can be shown for the Austrian market. EIF is doing 60% of our investments every year are emerging managers. And actually, I've shared the data a week ago in our yearly venture capital conference. Our investment performance would not be the same without emerging managers. So let us get rid of this stigma that only blue chip investors that have delivered 15 generations of top IRRs are going to do that in the future. Actually, more than 30 fund out of our top 50 best performing funds in our portfolio are emerging managers, and that speaks a lot.
Which is fair. On the other hand, if you're actually working at a fund of funds, selecting those emerging managers, which is also going to be work, because we're not talking about only venture capital in Austria, we're talking about growth investors, we're talking about the famous Nachfolgeregelungen, which I don't really know how to say in English, basically business handovers to next generations. So it is about selecting emerging managers. And I mean, question is, would you really trust a novice team at the fund of fund level, or would you rather have somebody who's done that before?
The novice team will not succeed in that. You need to have the skill set together, for sure.
Yeah, that's what
I think that's a bit of maybe a confusion, right? We need to have a team that runs this fund of fund with perfect track record and international track record. That's a given. That does not mean that the underlying assets, the underlying funds need to have 15 years of track record. That would be a big mistake, and that's what Uli is saying. There's a long success story of backing emerging managers, and honestly, if you want to do this in Austria, you have to do that because there are way too few established managers. So that's the...
I fully agree. And I think maybe just to add the point there, if you think about making the right product, investing partly in emerging managers is an important part. But for me, it would also be important if I were to invest in this product, I would recommend somebody to invest into the product. I would also want to have a manager that can actually get into attractive funds, that can attract international funds to invest in Europe. Would you agree that this is also part of what the management should be able to do?
Yes, definitely. I mean, capital always finds the way to the most attractive, or the most attractive investment opportunities have no problem attracting capital. But I would strongly agree to Uli, emerging managers really drive the performance of a portfolio. But looking at track record, individual track record is really important of the managers. And as it's really a long-term journey, such a fund investment, it's really important that the team is complementary and the team is committed to work together for a long time. So this is really key. On the product side, I think there could also be benefits which can be added, because I mean, Austria as a state, as a government, stands also, I mean, for solidity, and it can enhance the product in order to fear or defend some of the risks which investors may be afraid of.
No, absolutely. Maybe coming to another point, because one of the parts of the product definition that we've spared out in those public-private partnerships is always the kind of how much money does have to go to Austria, how captive is the product to Austria, what does having an association with Austria about in the investment strategy actually mean? Where would be the boundaries for you, Oliver? So if the BPI guys come and actually put, this is the French, this is kind of the aspiration level where the Austrians should ever get to, I think, with regards to public-private partnerships. If they came with some requirements, where would you say, honestly, I'm not doing this?
So there's at least for me, there seems to be kind of a common ground nowadays in Europe. It's roughly 2x. So if they give us 10 million, then we need to reinvest 20 million in France or in Italy or whatever, which is fair. I think that's totally. If you're not committing to that market, then you shouldn't also talk to these fund of funds. I think that would be weird. So then it becomes difficult. A lot of them sometimes then ask about like you need to open an office. Then you have maybe one person in Milano which is traveling back and forth. So that's already becoming much more tricky. On the other hand, for us, for example, like PPI gave us 10 million. It's not a lot out of a 350 million fund. Now we have 6 people in Paris. It's the third biggest market for us. Would we have done this anyway? Yes, but it was an additional incentive to take it very serious. And this makes a difference. And these are very small things that have high impact for the market. So I would go where I would follow that route. Yeah.
Can I make a comment on that?
Yeah.
KfW Capital, we only request one time our commitment to be reinvested in Germany. But you're right, some request two times the commitment. But the good thing is if I look at our portfolio, for every euro we commit into a fund, the funds on average commit like 4.5 to 5 euros back into Germany. So it's also looking at Austria, it's an attractive way to leverage capital. So investing €1 and getting back 4 or 5 euros into the country is quite attractive.
And maybe there, I think there's a big difference between Germany and Austria. I think that's where we have to be careful, right? It's because for us, for example, Germany, that was never a hurdle, right? That like even if you would have said 2x or 3x, fine, we'll do it anyway. But in Austria, of course, it's a small market, and especially when you talk about growth capital, even more difficult, right? If you talk early stage, easy. Growth capital, you have to be very careful because there are only so many deals in Austria that are of high quality in growth. We have to be aware of this.
And it's probably an interesting point, Uli, because for me the important thing would be to make sure that we actually attract capital to potentially invest in Austria. And I really applaud the KfW Capital guys to come with very little strings. Because my feeling is, if I just look in my own industry from the biotech side, we have a lot of local funds in different geographies that have so many restrictions. My previous fund that I built in Germany, you have to invest 70% in Europe, 50% in Germany, 20% in Bavaria, 10% in NRW. You end up with so many restrictions that you end up just managing restrictions rather than managing a portfolio. And if in the end, I think the really strong thing about a fund-of-fund manager is you have the next ticket. There's going to be a next fund. And if people are not putting enough effort into Austria, you will not consider them for the next fund. So the question is, how much does one need to write in stone, and how much can one actually do with capital allocation?
I would go even further, Regina. Even the thought that you have got the stick or the carrot, whatever it is, for the next generation of fund, and being a fund of fund able to invest in that, obviously that is something that plays in the mindset of fund managers. But I would put even more of the responsibility to the management of the fund manager, because ultimately it is not the restriction that you put on somebody who is going to decide on where the money is going to end up. The reality is that if you are not comfortable that an investment strategy is sufficiently inclined towards a certain geography, that it is capable of delivering risk commensurate returns in a deal flow that originates from that geography, you should not invest. Because otherwise you're basically importing into that fund strategy a kind of permanent conflict of interest for the fund manager between going for the best and most attractive investment opportunities in order to serve the risk return expectations of the investors on one side, and then to have a kind of policy objective lurking somewhere around that actually says, okay, if I'm not going to comply with this now, my next fundraising is in jeopardy. Which, as Jörg said, I've looked into the statistic. Right now in Europe, in 2025, we've got 50% of the capital that is raised by venture capital raised from public sector. So if you have that as a kind of Damocles sword hanging above you, obviously that is influencing it. So I think obviously we will have to debate on what type of indicators are put in any management agreement in order to give comfort to the political scene that they are not throwing taxpayers' money across the other side of the ocean to back companies in the US or whatever. But more importantly, I think we need to be in the selectivity of the management team again, focused on people that genuinely know how investment strategies translate into portfolios and can actually make a judgment call of whether this is serving a purpose, yes or no.
Maybe just on this point, it comes back to your first point, which I think is the ultimate question, especially in political discourse. What is the ultimate goal of this, and what do we want to achieve? Currently, in Austria, we have nothing. We don't have public money that goes into Austrian-based venture, or very, very little. I mean, tiny. So that's where we talk about this 1 or 2 or 3x, whatever it is, money going into Austria, and these are the typical restrictions of specifically public money. That's the one goal. We need this. Austria needs this. The other goal is to set up an internationally successful lighthouse fund of fund, like Temasek, like KfW, that really is world-class and that brings the whole ecosystem to the next level, which of course is the ultimate goal. And that's where, in this setup, even talking about like country multiples is a bit weird, because that would take away ultimate performance. And I think we need to be clear which of the two do we want. Do we want both? In which order? And what is the priority? And not mixing this up too much, because that can be quite dangerous, and we can end up again in the middle with no outcome. Yeah.
So what would you vote for?
Mike, of course, long term, let's say 10 years from now, which is in venture not long, we need the second. That would make a difference. I mean, we look at Taiwan, look at Singapore. These are not big countries, and they became rich. They became massively rich exactly through this initiative. So, and they didn't have a big manufacturing background either. So why not do it in Austria? It's very, very visible. It's very clear we could do it. But that's a long-term objective, and I think the risk is that we are landing in the middle. That should be avoided.
Okay, very good. So we're coming to the end. If we actually want the people that can actually make things work, and actually one thing I have to say is we've only been discussing the how, not the if any longer. And this is such a great achievement from last year to this year. So everybody within here, last year it was all about the if and when, and now it's about the how, and it's actually now. And I think this is so great. With that in mind, any last sentence that you want to leave anybody in the audience who is part of the decision making here, as kind of something that they should definitely bear in mind?
Well, I think I've got a message for both the public sector and the private sector to take away. For the public sector, I think my call would be to be genuinely brave, not only in speed, and Oli, he's got this in his logo, Speedinvest. He's got a kind of competitive advantage, not only in the speed, but also in the question of scale. Because if we look at it from the experience that we have in venture capital funding in Europe, this type of instruments is possibly the cheapest policy instrument that the public sector can put to life. Because not only they are not going to lose money on it, not only this is not a sunk cost type of one-off thing, but they are getting the kind of money back, and they get a return that can fuel next initiatives in the same space. Perfect. So this is to the public sector. The private sector would say, I know that there is this discussion on should we engage in this, how much should we engage, should we put the money in the fund of fund rather than putting it into the fund of Oli and things like that. Maybe we can actually have this done in one go, and for the next 5 years we are in peace. Look at it from the perspective of your own business model. If you have got a market that is not thriving in innovation in Austria, this is going to put the economy at risk. And the economy at risk is also putting at risk the fuel into your asset management flows that are fueling the assets that you are going to deploy in whatever type of business model that you're following. And we basically have the choice today at this injunction of the development of our economic model in Europe, that we either step up and put real money at work for innovation, or we are going to basically operate this sustainability of a kind of economy in distress through ever-increasing tax claims that we are going to charge to the economy in order to sustain what we call the welfare state in Europe until it becomes not financeable anymore.
Thank you. Jörg, any last words?
I couldn't agree more to what Uli said, so I keep it short. The time is now. There's no second chance to do it right, and I think it needs a coordinated effort between the policymakers and the private investors to really come up with a solution, because there is no alternative to, in other words, it's not an alternative not to invest into the future, not to invest into innovation, to tackle the challenges we have. And that's not an Austrian problem. I think that's a European problem. But really, the time is now, and there's no second chance.
Perfect. With this, I would say we bring this panel to an end, and I hope that next year we're going to be sitting here with a simple, market-driven product, a management that actually has the right experience and an aspiration level to make sure that in the short term there's enough money for the funds that are here and that should be born, with a long-term incentive to really have an asset player in Austria that can actually achieve competitive returns on an international level. That's my wish for next year. Thank you so much to the panelists.
Thank you.